Hello, everyone. Welcome to the market update here for Tuesday, November the 8th. As always, if you have any questions during the week or any questions I don't get to here in the live class, make sure you send those to jerry@traderspro.com. Keep in mind that I usually answer emails in the evenings. I have a kind of a time slot that I have scheduled in. Kind of work on that. Usually during market hours, I'm pretty consumed with what's going on in the markets and all the stuff I've got to do during market hours. So I don't usually check my email account during that time. So just keep that in mind, because if you're looking for an immediate answer to something, that you probably won't get it till the evening. So just be aware of that. All right, let's get started with the update here. Obviously, election day today, all the focus is going to be on, what happens with those results. You probably heard a lot of commentary on, what the market is kind of hoping for. Typically, the market likes to see a little bit of gridlock in Washington, and so obviously that would mean that the market is kind of hoping the Republicans take either the House or the Senate or both. If Democrats control both chambers, I think the market will view that as negative. Again, this is not and this is where you can, a lot of times when you get into politics, people get very emotional and they take it very personally and things like that. It's one of those things you don't discuss at family gatherings, religion and politics, right? Just keep in mind that's not always the case. That the market is going to want, Republicans or Democrats to take over the presidency or the House or the Senate. It is very situational when it comes to that stuff. And in this case, it's looking for gridlock, the spending to slow down a little bit, which it already has, but the market would anticipate that that'd be better for the economy moving forward, or better for the markets moving forward. It could be the opposite effect if Republicans held presidency in both chambers. The market would want Democrats to take control to create that gridlock. So I just want to make that clear before I, get angry emails one way or the other. Talking about this or defending a political point of view. So it'll be interesting to see. Now, the market really isn't giving us any strong clues as to how it'll trade after the results tonight. As far as the charts are concerned, and I'll show you that here in just a second. But to be honest, the markets really haven't been giving us strong clues in either direction for a number of weeks. I mean, we've had occasional situations where we've been able to kind of see what direction is more likely to take place, but we've got a lot of these whipsaws that have happened, and I think it's obvious that happens when the market gets uncertain. When professional traders can't get an idea of where the market is going. Remember, they're the ones that move the market. What happens a lot of times is you get this sideways kind of back and forth type movement. And because we can't move the market ourselves, we're not big enough. We just kind of need to wait until they figure out what direction they want to go in, and then trade that direction. It's worth pointing out that we're still in a bear market. So despite the rally we've had recently, we haven't changed that yet. And so we've got to lean a little bit more towards these rallies being part of a correction for another move down until that changes, until we start seeing stronger evidence of of maybe a trend reversal taking place. But you can see we're in a bear market, and then the other direction alerts aren't pointing out any sort of extreme. Momentum's right in the middle. So we're not overbought or oversold, which means we could go in either direction. And like I said, when we get to the charts aren't helping us too much either. Usually, a lot of times when you're in the middle like this, you can see either a strong trend up or a strong trend down, and you can assume that the market is going to continue in that direction. But like I said, we're kind of in a coin flip type area on the chart. So Brett is in the middle as well. We're pointing out that sentiment it's in the extreme, and it's been in the extreme for a while, but notice how it's creeping a little bit more to the right side of that extreme range. And you see that indicates a potential bearish reversal risk. When sentiment starts to get too complacent, then you're in a vulnerable situation where you can start to sell off and drop. Now, you're never going to base a trading decision on that alone, but if you see the market get extremely overbought, you're getting a very high complacency signal, and you get like a bearish reversal candle or something like that, you add that up, and there's a very high chance you're going to get a pullback right there, or some sort of sell-off at that point. And it's great when you get those signals, all those signals, because it's almost like you're able to kind of predict what's going to happen next. But sometimes you'll get one or two. You don't always get them all lining up, pointing to that. But that's something to keep an eye on. If we continue to move higher and we start pushing towards that far right side, and I'll show you on the VIX indicator too, what you would kind of look for is an area where maybe the market would start to sell off again. We're not at that level yet, but it's something to keep an eye on in case we do rally out of the election results tonight. Now, I also want to point out, you're hearing a lot of talk about, if you've been watching CNBC or you've been on some financial websites, kind of the big thing that's going around is that, that the period after the midterm elections through, I think it's like June or July or something like that, has always been up over that period of time. In the whole history of the markets. Well, we're talking about the elections, though, not every year. But after the midterm elections, the period from after the midterm elections to June has always been higher. And that gives people to feel like, well, they, just go in and jump in and buy. There's no way you're going to lose money or something like that, or it can give them maybe in some cases a false sense of confidence. Keep in mind that a lot can happen in a 6-month period of time. We could get the panic sell-off we've been waiting for, and then snap back and work our way higher to where we do end up higher by that time period. In other words, we've already had that. We had this big run up. We've had this big kind of decline. It's possible that over the next couple months or so, you could get a big drop and then work your way back up over 3 or 4 or 5 months to where you do still end up higher. It still works that it's higher, but you still might not escape a big drop ahead of that. So I just don't believe in just blindly buying on some of these catchy type reasons that come out from time to time. The Santa Claus rally, you're going to hear that 50,000 times between now and the end of the year, but no one can ever pinpoint exactly when the Santa Claus rally is supposed to take place. Everyone has their different opinions of where the Santa Claus rally starts or where it ends. And the ridiculous thing about that is you could take any 1 month or 2 month period of time and find rallies within that period of time. And so in other words, every month could have a Santa Claus rally if you don't have a well-defined time period of where that's supposed to happen. So I'm not big on, I just think it's dumb to buy based on those types of things. You want to focus on what the chart is telling you to do, and that's what my job is here, to teach you how to do that, how to use the software, and just be cautious. Remember, you're in a bear market, and that hasn't changed yet. And so just don't ever just listen to some of these things that people say and just go blindly buy. And that goes with anyone that's on TV. That, what's your pick of the day? Think about that for a second. If my job was, I've got to come up with a pick at the end of the day, or at the end of the segment on TV, is that going to be always a well thought out and smart pick, or is it something I got to have it? So let me look at my list. That one looks pretty good. Let's go ahead and post that one as my pick. If you're going to go blindly buy on something like that, you're going to get beat up quite a bit. So just remember to, first of all, educate yourself, learn how to read a chart, read price action. And like I said, there's a lot of the training videos there on YouTube that you can access under the TradersPro channel that can teach you that stuff. And it can be overwhelming when you see 30 videos or something like that. Just dig in and start, and eventually as you go, you'll gain more and more experience and more knowledge. And keep in mind too that the software is designed to help you make money while you're learning and educating yourself and getting better at all this stuff. So it all kind of works together. All right, now the buy-sell ratios, again, they're not showing any sort of extreme as well. We are seeing the buys outpace the sells, which is a little bit more bullish. And like I said, we're not in any of these extreme wide ranges, so there still could be some room to run, and that could be in either direction, though. Just keep that in mind. This is not signaling any particular direction. They're just saying it's not stretched in any one direction. This sentiment indicator is it got close to getting overbought, but it's backed off with that recent sell-off we've seen, and we're not in any sort of stretched area right here. Let's take a look at the indexes, and you can see there's different ways to read this. We talked about could this be the bearish ABC pattern, and we're starting to move down right here. We're going to head lower from this. Obviously, we've had this little bit of a snapback in the last couple of days after initially dropping last week. Could it be that we've got a higher high right here, we've got potentially a higher low right here? Could it be that we're stair stepping up, or we're in an uptrend right here? It's just hard to tell what's kind of going on. I will say that this whole behavior right through here is very corrective looking. Notice how these moves are very sharp, very what would the word be? Very well, I call it impulsive, meaning it's moving sharply in that direction. There's not a lot of back and forth. Remember in the basic stair step analysis that stocks, when they take off, they'll go into an impulsive move, and then when they correct, it tends to be more choppy, more sideways. That's what kind of creates the stair step. And now it doesn't mean that whenever you're seeing kind of this choppy type behavior, it doesn't always mean that that's going to end up leading to another impulsive move down. I've seen bottoms that form this way, where they look a little bit corrective, and then you suddenly take off. What I keep referencing, at least the last couple of weeks, has been the Dow. The Dow definitely looks like it's been in an impulsive move right through here, and so so we're seeing it, the NASDAQ, the S&P to some extent, and the Russell 2000, we'll look at that one here in a second, as being very choppy, very corrective looking. But the Dow is looking very impulsive. It looks like it's trending. Now, typically the Dow doesn't lead, and so that's been the big question lately is you know, the NASDAQ is not confirming what the Dow is doing, and so, you know, there's the argument. At the very least, there's the argument to be very cautious about jumping into this, thinking that the downtrend is over. This is not typically what you would see leading the way out, and so that's why it makes me a little bit cautious. Now, you can also see here on the Dow that it looks like you might have 5 waves in the Dow. This could be wave 1, wave 2, wave 3, wave 4, wave 5. In which case, it could be that this is getting towards the end of the move up. Not necessarily that it would lead to a big move down. It could be that it completes 5 waves and then goes into like an ABC. And then, hold on just a second. All right, sorry about that. Okay, so, and what could happen is that if this goes into a correction, it could mean that you could see where this is actually going down, but it's part of a bullish correction, but you see the S&P and the NASDAQ go even lower. There could be that type of divergence that takes place. But that's been what's been confusing to me, is that you see really bullish look to the Dow, but just the opposite with the NASDAQ. Here's the NASDAQ 100. You can see that it's not even close to what the Dow is doing. The Dow's all the way up here. This is really lagging. Even with the rally over the last couple of days, you can see that this looks more impulsive right here, and this looks very choppy as it's trying to rally back up. And even looking at today, we were all the way up here at the highs. We're now trading lower than where we opened. So that's what I'm saying. We're not getting a clear direction here, either from the direction alerts telling us overbought or oversold, or the charts themselves. You know, I keep looking at these, and back here it looked like there was potentially it was potential that we were heading lower from those moves down right there. But if you remember last week, the big theme of that was that we were dropping on those days, but the VIX was dropping as well. There was no fear in that selling, and so that was, obviously that's confusing to me. I'm like, okay, wait a second. If this is starting a much bigger move down, that VIX should be moving up. There should be some protective puts that are being bought ahead of that, and that wasn't happening. And so that's concerning. And it was concerning from the standpoint is I didn't want to trade that move, expecting the market was going to go lower there, with the fact that the VIX wasn't confirming it. So the bottom line is what I said earlier. What I gather from all this is that the professional traders are trying to figure this out. They don't know exactly yet what direction they want to go in. They're the ones that move the market. Our job is to follow them. And as of right now, we're getting these mixed signals. Now, it might change very quickly, although this looks very corrective looking or sluggish on the rally there. Again, the focus is on those elections. It could be that we're seeing this ahead of the elections because everyone's waiting to see what those results are before they commit the capital to either bullish trades or bearish trades. but that's something to keep an eye on. We'll see what happens there. And what would I look for then as far as getting a little more clarity? Well, the biggest one is, do we start to see the NASDAQ 100 outperform the Dow? Do we start to see this become more impulsive and really start moving upward in a strong direction? Do we get a day where, the NASDAQ is up, 2%, the Dow is only up 1% or something like that, to where it's outperforming, it's showing outperformance. That would be something I would look for, and let's see if we get it within the next few days. Now, Thursday, we'll probably get a little bit better idea of how the market is reacting to the results, although remember, some of the results we're not going to know for a few days. It takes a little bit of time for those really close races to get the proper count and all that kind of stuff. And so, we could be going into tomorrow with without still knowing, what the results will be, and it might even lead into next week, for that matter, with some of these results. So, but that's something that we'll be looking for. Is the market just waiting for that? Now, you got to be careful though, that because the market recently it's been one thing after the other. It's okay, we're waiting what the Fed does, and then what the jobs report is going to be, and then what the CPI. There's talk now after the election, the attention is going to be focused in on the CPI report, and what that's going to tell us about inflation and what the Fed might do. And the problem is that the market's constantly moving from one to the next, and if it doesn't make up its mind how it wants to trade, we get more of these choppy results, where we're just kind of back and forth. Let's take a look at the Russell 2000. You can see it's also kind of got that choppy. Now, that's one thing about ABC patterns is that typically in an ABC pattern, you're going to get, wave A, wave B, wave C. You see that a lot. You'll get that 3-step move. But I always tell people, don't get too focused on just expecting a three-step move, A, B, C, because it doesn't always show up exactly that way. That's why I say you look for ABC, but what you also look for is, does it look more choppy or sideways kind of looking? Because sometimes you can get, in the case of this maybe being a downward move here, you can get what looks like initially is a bearish ABC pattern, and then it chops around just a little bit more and then drops. That's still a corrective looking pattern. But this is why trading ABC patterns is not always going to be, you're not always going to get perfect results. I could short it right here, or buy a put option or something like that, only to have it not work out because it's still correcting, and then it drops later on. I will point out though, again, this has a very similar move to the NASDAQ 100. This is more impulsive down. This is looking a little bit more sluggish as it's trying to rally. Today's got a little bit of a bearish candle where it opened up here, it traded all the way up here, and now it's trading lower. Yeah, this gets back to what I mentioned at the beginning of class too, that, don't be just blindly jumping in and buying because people tell you that 6 months from now the market will be higher or tends to be higher. It could be telling us that we're about to get a sell-off right after the election, and then maybe it starts to work its way back up. So bottom line, we've got a lot of mixed signals here. Hopefully we have a little more clarity on Thursday. Now moving on to the bond market, what I talked about on Thursday was actually Tuesday and Thursday last week, was this looked a little bit more impulsive. This was looking like a little bit of an ABC, and I felt like we could have another move up, and that might just complete a bearish ABC pattern where that was wave A, wave B, wave C, and then it dropped some more. Although the bond market has dropped so far, we're probably in the later stages of the drop, and each time we start to rally, we start to look for clues that maybe you're dealing with a trend reversal. We just don't have enough of those clues just yet. But what I'd be looking for this week is, does it go into that wave C? It has a little bit of a bullish candle today. We'll see if this puts in a little bit of a higher low right there, and let's see if it can move up above this high. Now, again, that doesn't necessarily mean you had a trend reversal. That could just be a bearish ABC pattern that completes. The longer that kind of trends up or if it comes in, or if it has an impulsive move and then it's followed by a corrective move and then impulsive again, that would look more like a trend reversal if it starts to behave like that. Now, if it just reverses right here, obviously, if it goes to a lower low, that's confirming the bearish trend. That means that this was the correction right here, which is weird because it was such a sharp rally. It wasn't really choppy or sideways as what you expect in a corrective move. But that would be the reality if it just drops lower from here. So that's something to kind of keep an eye on over the next couple of days. We'll have a little bit more clarity. Should have a little more clarity on this on Thursday as well. Overall, though, the trend is down, and what we're just looking for right here is this just a correction for another move down, or are we looking at a potential trend reversal? That'll kind of play out over the next couple weeks or so. But it's important that we don't. It's important that you're, looking at the obvious. The trend is down. It's clearly down, and we're assuming it's going to continue to move down until it shows more clues that it's reversing. What you don't want to get caught up in, especially when you're looking for possible clues down here of a trend reversal, is assuming that it's going to start going up because it's just down so much. Sometimes we see a stock that's down a ton. And what we start to do is we say, man, if it just got back up to where it was before, I could make a killing from here to here. And so you start trying to guess where the bottom is, and you start to hope that this is the bottom. Maybe it shows a little sign of moving up, and that's what creates these downward patterns. Is that you get that initial rally. Buyers wonder if this is the bottom. They start buying into that a little bit, but it's sluggish. It's not really going. It feels like they're making a little bit of money, and then all that is a correction, and then they get wiped out. They start stopping out. It fuels the selling as it drops lower again. And at some point, what happens is you get to what creates the bottom is you get to a point where you get that initial rally, and people have been fooled so many times that they're just like, oh, that's just set me up. It's like Charlie Brown and the football, pulling the football away at the last minute. At some point, you expect that the football is going to get pulled away, and you're not going to fall for it anymore. You might have fallen for it 2 or 3 times, hopefully not that many. But at some point, you're going to be like, oh, this is just another rally that's going to lead to another move down, and that's usually the point at that point when everyone's very bearish and is not expecting that to be the bottom when it actually starts to become the bottom. That's why whenever you're looking at a stock has come way down and then it's gone way up, and you're like looking back, you're like, man, I would have loved to have bought it down here. How come I can never buy stocks down here? And the reason is because when you're down there, it doesn't feel right to buy. It doesn't feel like you want to buy it. It's just the opposite. And so you have to learn to do the opposite of what of what your feelings are telling you. You've got to be bearish when everyone's bullish. You got to be bullish when everyone's bearish, and that's tough to do. And it's almost impossible to do if you're just trying to do it on fighting the emotion alone. If you add in learning how to recognize trend reversal patterns and price action and things like that, it makes it a lot easier to go against what the crowd is doing. But that's why it's hard to buy down here, is because it's not going to feel like you're going to want to buy down there. And that's kind of where we're at right here is we're trying to determine, we're trying to see, is this starting to show signs of a trend reversal, or are we just still going to continue that trend down? a couple of interesting, well, let's do oil first, or gold. Gold has had a sharp move up. I think a lot of this is combined with the dollar dropping pretty dramatically. We'll look at the dollar chart here in a second. But you're seeing a potential bottoming process right here. If we back out, you can kind of see it a little bit better. Now, we've talked about this recently. I usually skip over the gold chart because it's been pretty erratic, and in some cases, some of the moves haven't made much sense. But I'm starting to see a potential. It's starting to behave a little bit like a potential trend reversal. Now, again, we started talking about some things on TLT bonds that were what to look for as far as a trend reversal. We can start to do that with gold here too. You can see that this is kind of put in a double bottom right here. Now, could it be that this is just wave A, wave B, wave C, and we're going to get slammed again in gold? That's definitely a possibility. But what you want to look for is does this recent move up continue to go higher? And does it break? Do we break above here where it goes to a higher high? When it pulls back, is it a little bit more choppy or sideways? Those are all clues that we could look for that could indicate that maybe this is a trend reversal. One thing that really jumps out at me is if you draw a trend line down, it's not going to be a real straight line, but it won't need to be. We've broken that trend line with this recent move up right here. I think that's significant. Not only the fact that we've been dropping for a long period of time, but now, although technically this did go to a slightly lower low, so you could still make the argument we still have lower low right there. You could also make an argument it's a little bit of a double bottom, which makes a move above here, above that 160 level on the GLD very important, because if it can go to a higher high, you could make the argument this is an equal low down here or close to it. If you get a real clear higher high right there after breaking this trend line, I think you're going to be talking about the potential of gold being in that trend reversal and starting to move into an uptrend. Silver is another one. I don't usually go over silver, but it's kind of been performing a lot stronger compared to gold. As you can see, it's already broken to a higher high. You look at the longer term chart on this. And you can see that you clearly had a higher low right here. You had a higher high right there, but now you've got another higher high. And this is important because that higher high took place before this higher low. So now you've got the higher low, you've got the higher high, and now you've got another higher high right here. So it's acting and it's looking like it's moving kind of in this bullshit, moving up the right side of the bowl right here. You hear me talk about that all the time. It's one of my favorite patterns to trade when you come down, you kind of formed a base right here, and it looks like you're coming up the right side of the bowl. So that's something to keep an eye on as well. Now, I think we'll need to see the dollar probably continue to be weak. If the dollar starts to strengthen again, it could put the brakes on some of these commodity trades, because there tends to be that inverse relationship with commodities, as we talk about a lot. Oil. Now, oil, what we were looking at with oil recently when we were down right in here is I wanted to see a higher high above here. We got that on Friday. Now we're down a little bit today, but overall we've got a higher low, higher high. Again, kind of the same thing where you're starting to move up the right side of the bowl. We've been pretty bullish on energy and oil. Going into the winter, there's a lot of fundamental reasons to be bullish, a shortage of different energy products throughout the world, coal, natural gas, heating oil, all this stuff is going to be in demand this winter. So that's why we're positioned pretty strongly in energy and oil in the portfolio as well, because it's really the only thing that's been working, aside from some of the consumer staple groups and things like that. The dollar, though, is going to be important as it relates to commodities, and it's been down. Although one thing I've been talking about recently is, could this just be, I was talking about this as being an ABC, possible ABC correction, bullish ABC pattern right here. And last week we were moving up out of that to where it was looking more and more like, this was going to go higher. Reverse back down again the last few days. But this kind of ties into what we were talking about with the indexes as well. Is could this, if you're always looking for just an ABC pattern, wave A, wave B, wave C, corrections don't always follow that. Sometimes you get that extra little corrective move. Overall, this looks like a choppy sideways pattern that could possibly lead to another move higher once it's done. I don't know when that would be done, but it could eventually lead to a continuation of that trend. Now, the way the market is behaving right now, and this is not always the case, so you don't always want to draw this conclusion that strong dollar is bad for the market, or weak dollar is good for the market, or vice versa. Weak dollar is bad, strong dollar is good. Because there will be different periods where the market will focus on one particular direction, and there are times where a stronger dollar is positive for the market, and a weaker dollar would be negative for the market. So we don't want to, like I said, always draw that conclusion. But recently, when the market has been going down, or when the dollar has been going down, the market has been rallying. We've seen the rally over the last couple of days, although not a real strong rally. And the market dropped when the dollar was rising right through here. So there is a big focus on that right now, and you don't need to understand why that is. It's just it is happening, and so if we break this support area right here and go lower, that could be something where you can see the market rally off of that. But if we do have another move down, if it's because the dollar is rising and starting to show some strength. Again, we don't know yet. And sometimes reversals, tops can, they can look a little bit corrective up here, and then you get a big move down, and it becomes clear now you're in the downtrend. But as of right now, I'd still be very cautious about assuming the dollar, because you're hearing a lot of people talk about the dollar weakness, and there are even some people are saying the dollar is looking like it's going lower and it's going to keep going down. I don't see that yet in the chart behavior. I see it in the last couple of days right here, but this still looks like it could be a correction for another move up. And I need to see, a clear break of this support area and a little bit more of an impulsive look down from here for me to turn more bearish on the dollar right now. But if you do see that, again, if you're looking for short-term trade opportunities, there's a couple things you would look for when a dollar is falling. Obviously, commodity trades should go up. Oil already doesn't need to have much more of a reason to go up, and with all the demand you see. But if it gets that extra boost with the dollar dropping, that could be a no-brainer type trade. Like obviously gold and silver, other commodity-related positions, wheat, corn, or anything related to agriculture could get a boost with the falling dollar. Also, emerging markets, they tend to do better when the dollar falls. And the way to trade that, if you're interested in trading that, is the EEM. It's just an ETF, so it's just a real easy way to kind of trade that. And you can see with the dollar falling, you're seeing the EEM go up off of that. So now I'm not saying that the dollar is going to continue to fall, but if you do see that, these are some areas that you could take advantage of that. Knowing these relationships can help you kind of profit from that type of a movement there. Okay, so that's something to keep an eye on. The VIX, like I said, what was bothering me a little bit with that decline last week was, or the week before, was it the week before or last week? I can't remember which day it was that it started, but what was worrying me was that the market was dropping, but the VIX was dropping as well. It wasn't showing any sort of sign of fear. Today, it's starting to move up. Now, it could just be people hedging a little bit ahead of election results, which are unknown at this point. what those results are going to be. The market has moved down. Well, actually, we had a situation today where the market was up and the VIX was up, which, again, whenever you see the VIX and the market moving in the same direction, you want to pay attention because that would mean that well, it could mean, well, when the market's falling and the VIX is falling, it's telling you those professional traders aren't worried about the drop. When the market is going up and the VIX is going up, it's telling you that they're concerned about the rally. They don't quite trust the rally when that happens. And so we were seeing a little bit of that opposite divergence there with the VIX up and the market up taking place. So, like I said, it could just be, we see this happen sometimes around, Fed announcements or any sort of a major market moving event that where it could be binary. It could be good news, the market goes up, bad news, the market goes down, or something like that, and we don't know what the news is. Sometimes those traders will hedge a little bit. But it depends. I mean, it can be a clue here because they got to spend money to buy those protected puts. They're not going to spend the money if they don't think they need it. So if there's a binary event where they don't think it'll move the market, but it's not necessarily going to move it dramatically, they're not usually going to feel the need to buy those protected puts. If they do feel like they need to buy them, then it means that they are generally concerned that there could be a bigger drop, and that could be a little bit of a signal to us. Now, again, we're never going to base a trade on this alone. This is just one additional clue that we want to look at and keep an eye on that might be forecasting a particular direction. I don't think it's strong enough yet to forecast what's going to happen tomorrow. Like I said, we just got done looking at those charts of the indexes, and it's a coin flip type day where they could go either way out of this move right here. So now, I mentioned earlier, I'm going to look at, if you got another charting service, you can pull up the actual VIX chart, VIX. This is the VIXY, which is the ETF if you wanted to trade the VIX, which I don't recommend you trade the VIX itself. Well, I don't want to get into that explanation. It's a very complex instrument and very risky to try to trade those moves. But if you want to look at the actual VIX chart, you can't trade the actual VIX itself. But there are key areas that I always mention on the VIX. Number one is when you get above 30, that is telling you that the professional traders are fearful. They're afraid of, and it usually is going to coincide with a drop in the market. So the market drops and the VIX gets above 30, we probably have further to drop. Okay, we're probably going to go down further. It's not panic, but it's fearful selling that's taking. There's fear behind the selling at that point. Panic would be anything above 40 at a minimum, and you can see. And again, this is what I brought up a number of times: is despite the pullbacks we've had over the last year, none of them have spiked above 40. The VIX hasn't spiked above 40. So we haven't had a panic sell-off yet, which typically you have almost every end of a bear market that I've ever experienced. At some point, you're going to see that panic sell-off, that capitulation. We haven't seen it, which is why I don't trust the rally. I don't feel like the market's done going down yet. But that's what you would look for, is you do get a spike above 40. Now, I mentioned earlier that the VIX is also, remember what I was talking about in the direction alerts. I can go to those here real quick. The sentiment indicator, I said it could still become even more extreme before you could look for maybe being in a position where the market could drop. On the VIX, that area on the actual VIX indicator, if you're using the VIX indicator, would be down here around 20. You'll notice over the last, and again, this is relative. It's not going to be this way every single time, but you can see that when the market has gotten down around 20, we've had these big sell-offs that have spiked the VIX up. Okay, we're kind of in no man's land right now. Okay, we're not fearful, and we're not overly complacent down here. And so, if the VIX does, if the market rallies from this election, this is something I'm going to be looking at pretty closely. Is do we see the VIX get down around 20? If we do, it doesn't mean you're going to sell off immediately. Okay, so you don't want to just short the market if it gets down to 20. We're not going to just get into those inverse ETFs, the SOXS and the SARK, just because the VIX is down around 20. But what you start to look for is you say, okay, that's an extreme. Do you start to see any sort of bearish reversal candle or any sort of sign that the buying could be slowing down? And if you can combine those two, that could lead to maybe getting a much bigger sell-off in the market. So that's something that we'll kind of keep an eye on right here. But as of right now, we are seeing a move up in the VIX today, and so you've got, here's what I was talking about. You've got the S&P up. It's barely up. Okay, right now it was up a lot higher. The Dow was up like 500 points earlier this morning, or just actually a couple hours ago. But you've got the S&P up, and you've got the VIX up, and so that's telling me that those professional traders are a little concerned. And like I said, it could just be because they're concerned about those election results, so they're hedging a little bit. They're not panicking. They're not. It's not spiking today. It's just up. That's something to keep an eye on. If the market does sell off, remember during the last sell-off, the VIX was still moving down. So what I would look for is, does the market sell off in the next few days and the VIX starts spiking, starts moving up strongly? That would probably tell me that maybe we're not going to get down to 20. It didn't go to 20 right here, and it spiked up with a sell-off. It wasn't a big sell-off. It was a short one right back in June, but right out of this right here. But that's something I would immediately look at is the VIX confirming that selling. It didn't early last week or whenever that started. I can't remember if it was a week before it started, but it didn't confirm it on that drop. Does it confirm it if it happens here? So that's what we'll be looking at. And like I said, we might have a little bit more of an idea on this on Thursday's class. All right, let's see. Let's check the SMH. Now the chip stocks were rallying pretty strong today, like I said, until just a couple hours ago, and then now we've got a bearish reversal candle. That's something to pay attention to. Now they're still showing. It's still showing that all the indexes are kind of looking like this, but it's still showing. The SMH is showing that it's up for the day, but this is why you got to learn how to read the price action. It's up. It's still up right now compared to where it closed yesterday. Here's where it closed yesterday. But look what happened so far today. Now, again, we still have an hour before the market closes. A lot can happen between now and then. But here's where we opened today. We opened higher. We gapped up. We traded all the way up here. And now we've gone lower. We're trading lower than where we opened, although we're still higher than the day before. This is a bearish price action. It usually means, now these candles are very short-term in nature. All this is telling me there's a pretty good chance that we open lower tomorrow based off of that, if it closes like this. The only area of caution, though, is we've got this event that's taking place. It can reverse any candle. So that's why I wouldn't just go buy short the SMH or buy puts on the SMH because of that candle. There's a big news event that could reverse it. So, but it's important to recognize that is a bearish candle. And that's showing some weakness there. And again, I keep talking about the underperformance of the chip stocks. They should be leading the way. They should be all the way up here with the Dow down here lagging. but it's the opposite. And so it just makes me very suspicious because this could be leading the way down. It's not participating in that rally of the Dow, meaning that maybe it's getting ready for a big move lower. Transports, kind of the same thing. That, you know, we compare this with the Dow, the Dow transports with the Dow industrials. This is based on Dow theory. You want to go Google Dow theory and get more in-depth information of what that is. I don't want to have to explain it every week to new people, so that's why I just send it to the internet. Go Google it. You'll get plenty of free websites that'll explain what the Dow theory is. But the transportation stocks, the Dow transportation stocks tend to lead the way, and that's not what we're seeing. The industrials are all the way up here, and the transports are lagging, and they're lagging in what looks like a very corrective-looking pattern there. So it's worth noting. Same thing, bearish reversal candle today. We'll see if that is forecasting a move. Bitcoin down big today. Really, now I don't understand what that news was today. I haven't put in the time to really understand how Bitcoin works. You know, at my point of my career, I've just mastered equities, and I just don't have the energy to learn a whole new asset class. And so you know, I'm definitely not the person you would go to get more information on what I think about cryptocurrencies and their future. I can read a chart though, and the chart's been looking very bearish. We've been waiting. We've been talking about how this was either a basing move for a start of a move up, or this was a correction for another move down, and it looks like we're heading lower here, and it could get ugly. I mean, you know, a lot of these, there are going to be a lot of cryptocurrencies that go bust. We've already seen it, but there are going to be a lot of cryptocurrencies that go bust before a bottom is in these markets, and we might be seeing that. A lot of times too, there can be a scandal that comes out at near a market bottom that kind of fuels that capitulation selling, and we definitely are seeing capitulation selling today in Bitcoin, and you know, I don't know what, like I said, I don't understand. Something about all I kind of pieced together was liquidity issues with the particular cryptocurrencies, and that's always a bad sign. So we'll see how that plays out. But I just wouldn't go anywhere near cryptocurrencies right now. Don't be trying to pick the bottom on this. You want to see some stronger signals that a bottom is in and that it's trending back up. Before you jump into this stuff, because it could go much lower. Like I said, maybe the cryptocurrency that you're getting into, because it's so cheap, is the one that one of the ones that goes belly up, and you lose everything you put into it. So you definitely want to be careful. And then the high yield corporate bonds we've been watching, because the market's been reacting to these charts as well. On here. And again, it looks like just the indexes. You know, this still looks corrected to me, although it could rally up. It'd still be part of this correction before dropping. So I still think this is looking like a coin flip here, but this is something to keep an eye on as well. All right. In the portfolio, we're still doing all right. We're grinding some profits higher. Like I said, the next goal, we were around that 136,000 area. I was hoping to get to about 140 in the last week. We're close to that. 139. We're making progress. We're not making a ton, but we're grinding here, and that's all you can do. The other choice is just sit out and do nothing. I like the positions. Let's review those here. LNG, again, we're still kind of in this consolidation phase. This is our natural gas play. We're waiting for that to kind of break out. My stop's all the way down here, so you know, no, there's nothing I'm going to be doing on this. MPC, this is the oil refinery. Again, just kind of, it's a little bit sluggish the last few days, but it's been in this nice uptrend. No reason to get out of that. Tech resources, again, it's been kind of in this sideways range here. But again, this is a slightly higher low right here. If we can break out above this area right here, that'd be more bullish for the position. My stop is all the way down here, so it got close, but we're still in it. Still looks like it's moving higher. So I still like that one. And that one was in the basic materials sector. Yeah, so we're kind of just focused on most of our positions are focused on just the top performing sectors. CEIX, this is our coal trade. Again, it was down a little bit through here, but it's starting to move back up. My stop is down below here. So we got close, but it held. And now this is looking a lot more bullish. You have this kind of a bull-shaped move. You're back up here. If we break out above here, that'd be another bullish sign. I don't see why it won't. With the only thing I could see that could derail our energy trades right now is if there's a peace agreement between Russia and Ukraine, and the dollar starts rallying strongly, that would put pressure on commodities to go down. Other than that, I think these are pretty safe trades right now. So that's why we're in them. Another basic materials trade on CF. This one dipped down sharply right into here, but again, it's back up. It looks like it's getting ready to break out of this area right here. If it does, it'll work. It should work its way back up to this previous high. This is a fertilizer stock, so it's related to agriculture, which has been doing pretty well lately. And I held the SARK trade. This is the inverse ETF. This is opposite of the ARK Innovation Fund, the ARK. This is Kathy Wood's fund. Did really well back in 2020 during COVID, and she was praised as being the smartest person on the planet, which the market tends to do sometimes when people have this amazing run. But she's basically destroyed her fund holding on to these same stocks as the market has just dropped. And the only reason why we're using this, so this ETF is designed to do the opposite of her fund. So what we're using it for is we're using it as a hedge. It allows us to be long. We don't have to be short the market, but we can profit. If the market goes down, this will go up in value. So if the ARKK goes down, which is typically when the market will go down, the SARK is going to go up. And so this allows us in a bear market to hedge ourselves a little bit. So if the market drops, some of our stocks could drop with it. It would cause our account to drop a little bit, but we're hoping to make up for that with these going up in value. So you see that this is up today. Now notice I didn't get into the SOXS, although I may consider that one. That's the opposite of the chip sector. So when the chips go down, this will go up. That's another one I'll use to hedge. The SOXS. Now, keep in mind, I'm using these very short term. Anytime I think the market can drop, I'm jumping into these to hopefully make up for any losses in our other positions. Excuse me, just a second. Now, the SOXS is showing a little bit of a bullish reversal candle. And we saw that bearish reversal on the SMH, the chip ETF. I don't know yet that I want to jump into this today, because I think the market could rally off of the election news. So, but this might be something I jump into tomorrow. So if the market starts dropping, we see the VIX spiking up, and this is moving up, I might jump into this. So be aware of that if you're trying to mirror that. That's something you could look for tomorrow to use that to hedge your positions a little bit. Now, I did add NOC, Northrop Grumman. I told you I was going to try to get back into this again. I mean, the defense stocks are they're gonna do well over the next few years. They're going to be up. The stock's going to be up and down. It's going to stair step, but these are positions you're going to want to be in for the long term. There's just no brainers. Right now, the way the world is right now, there's just countries coming out of the woodwork that are now buying up weapons that never bought weapons before, or at least not at the level that they're going to start. Finland is really freaked out about being the next country that Russia tries to take over, and they're buying up weapons. Taiwan is desperate for weapons, and there's just not enough right now. So these people are going to be making money for years to come. You want to have some exposure to these. Lockheed Martin is one that I actually am thinking about getting into today. I was waiting for a little bit of a pullback on this one. Let me see what it looks like, though. I see it's still up today. Now, Lockheed Martin, this one's going to be just one I'm trying to ride. This is a very overbought stock. I mean, look how it's gone parabolic right through here. Now, this is where understanding your trend and understanding Elliott Wave. By the way, there's Elliott Wave training on the TradersPro site. Stocks, when they move, they tend to move in 5 waves. The latest move off of this low right here, this looks like wave 1, wave 2, wave 3, wave 4, and it looks like we're in wave 5. Now, what's the danger of this? Well, it could be that we get another 2 days up or something, and then it goes into a larger correction. Or it could really break out and go higher. I mean, we can look at a longer term chart here and see what does it look like on the 2-year chart. See, it's already broken out. Well, here's what I like about it too, is it broke out, and then on this latest pullback, it retested the breakout. It's stretched, but could it go even further? If you go back and look at, you go back here and you can see this looks like that could be wave 1, wave 2, wave 3, wave 4, and look how long this wave 5 went. Who's to say that couldn't happen here, where it really takes off and has gets even more stretched. The point I'm making is I already know I'm getting in late on this one, so I'm going to have a tight stop on this, and I'm probably going to get out if we get into this extreme, the far right side of this extreme reversal risk, because that would be telling me that wave 5 could be done soon, and we could be going into a larger correction. So I'm going to put a stop down below here. I'm not going to lose very much if suddenly in the next couple of days it drops down and goes below here. But if it keeps going higher, I'm just trying to see if I can get get $10 out of it on the, or something like that on the last part of this move. In other words, I understand what I'm getting into. I understand it could come back on me at any moment. I'm just trying to see if I can be in this for a few days. This is not a long-term trade here. It could end up being that, though, because if we go into a larger correction, I would want to then jump back in and ride that thing for a much longer period of time at that point. But so I'm going to add this. I'm going to put my stop below the November 4th low, about 472. $472. How much is 50 shares? Wow, okay, we do 50. That's how much is 15 shares? Okay, 20 shares would be right at the close to the $10,000 allocation area. We're seeing if we get stopped out, I'm looking to lose only about $420. So not a big risk there. Go ahead and purchase that. Now, the other one I wanted to look at getting back into is ADM, or Archer Daniel Midland. I'm going to wait on this one, though. I was going to get in today and then put my stop down here right below. If this does pull back, it shouldn't go lower than this previous high right here. But it's got a little bit of a weaker price action today, and with the market turning like it has, I'm going to see if this comes down a little bit further. Not to mention, I don't want to add too much more risk ahead of the elections here. So we might be jumping back into this one on Thursday. We'll see how it looks. All right. Potential patterns I like. I'm just going to go quickly to the muscle stock scans and the new buys. I do like this ARLP, Alliance Resource, 98 strength rank. Let's switch this over to signals here. Although, again, some of these look different now than they did before class. That's a little bit of a down candle right there. By the way, the black in the middle of these candles, I've got this question before a number of times in the emails. What that's telling you, when you're on the signals, you can't see. When I'm on the candles, the regular candles, the gray candle means that the stock opened at the bottom of the candle and closed at the top. In other words, it closed higher than where it opened. The red candle means it opened at the top of the candle and closed at the bottom. So it's a down. That was a down day. So up day, down day, up day. Although, again, keep in mind that we're talking about from the open, okay? Because remember, you could have a red candle like we did right here but it was up for the day, but lower than where it opened. So it closed lower than where it opened, but still up from the day before. Okay. So the red and gray is just telling you is it where it's closing based on the open. Okay. Now, when you switch over to signals, you've got red, yellow, and green. How can you tell if it's an up day or a down day, or did it close higher than the open or lower than the open? Well, that's where that black line is. If it has a black line, it means it closed lower than where it opened. If it doesn't have a black line in it, this means it opened down here and closed up here. That was an up day. That was a down day. So this is telling me it's a down day today. But I do like the fact, I do like this right here. If it could break out above here, and not go below this low right here, then that would be very bullish, because it should then work its way towards this high, and then it should break out above that. So you put this in a watch list, see if you get a little bit of confirmation. This is a coal stock, so it's one of those that I'm still pretty bullish on longer term, but you might want a little bit more confirmation or wait for an update. You might want to just keep this in a watch list for now. I got to hurry up here. Let's go over a couple. Or let's go to the new buy scan here. Actually, let's just go to the new buy list. EQT, this is another energy play. Again, it just looks like it's starting to turn the corner here. You could wait for it to go to a higher high right there. Now, I'm not suggesting that any oil stock is worth getting into. If you've got oil stocks that are still down here, that haven't rallied at all lately, I'd stay away from those, because you have to ask why. Why haven't they been participating in the rally? You got Marathon Oil that's doing well. You got Devon and some of these other oil companies that are doing really well. Why is this not this stock, but why was another energy stock still down, lower, or lagging? Doesn't look like it's been rallying. You might want to stay away from it. Maybe they got too much debt, or they've got other reasons why they're not participating. Just don't go with the fact that it's cheap. Oh, it's a $6 stock. Well, it's probably $6 for a reason, and you could be sitting on that thing for years and it may not move. And it may not, if it's not moving with the oil going up, then what happens when oil goes down? It's going to probably go down, and you're going to get hammered. So I'm not suggesting you just go into any energy stock right now just because it's an energy stock. You'd like to see a nice little pattern with it as well. I like this IMRA 97 strength rank. It's a biotech stock. Now, this could be one of those that could be in a wave 5 as well. It had this long base where it wasn't going anywhere. So something happened where they had some product that they have that's gotten the market's attention that consolidated through here, and then it's really taken off lately. This could be the wave 1, 2, 3, 4, and maybe you're in wave 5 right here too. But you could do a little bit of research on this and find out why it's just suddenly taken off, because maybe they've got something that could be revolutionary. Now, with biotech stocks, it can be a wild roller coaster ride, because it might be the idea that they got a product coming out and then it doesn't, the FDA doesn't approve it, and then it could drop, 50% of its value overnight, or something. It could. So some of these stocks should really take off, but they can also get hammered. Biotech stocks are notorious for that. So you always have to be very careful when you don't want to be holding too many of those in your portfolio. You might take a little bit of risk here or there, but you don't want to have a situation where half your portfolio get wiped out overnight. And then one last one here. This is one that's pretty popular, but ABBV. I like again, it looks like it's working its way up the right side of the bowl. Notice how you had lower highs and lower lows through here. You kind of had an equal low right here, but you had a higher high. Now you've got higher low, higher high, higher low. It's acting like it's moving back into an uptrend. So that's what I like to see. And this is under the large cap pharma sector, under the medical sector. All right. That's all I have. We'll see what happens tonight, and hopefully have a lot more to talk about on Thursday and have a little bit clearer direction on Thursday. All right. Have a great week, everyone. See you on Thursday for the stock specific class. Bye now.